They don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get in the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD and Melissa.
Hey guys, welcome to the Real Estate Jam podcast. I'm JD with my wonderful co-host.
Hey, JD, how are you?
Melissa. Melissa's been super busy today, so we're working through this market's super hot, and so we're putting a lot of offers in and trying to get some deals for her clients, trying to get some deals for ourselves. I'm super excited for our show today. I think that we're going to have a lot of great information. I got Seth Teagle. He's the CEO of the Stream Group, and the Stream Group is a vertically integrated real estate investment company specializing in multifamily investment properties. And if we do this right and handle this interview right, he'll also be a client because we're going to sell him a short-term rental down here. But we'll work on that offline. Seth, thanks so much for finding time to be here with us and hopefully share some knowledge with our listeners.
Yeah, absolutely. I appreciate you having me on.
Yeah, great. Well, I can do a great introduction, but I think it'd serve our crowd a little bit better if maybe you could let people know what it is that you do, where you come from, and kind of some of the things you got going on now, and we'll just take the conversation wherever it needs to go.
Okay, so I guess I'll kind of start where I came from. So I'm originally from Minot, North Dakota, which is kind of the middle of
Magic
nowhere,
City.
Midwest. Yeah, well, there you go. So I guess with Eglin Air Force Base and some of the other ones around that area down there where you guys are at, it's people know Minot just from the military part of it. But I moved to Florida actually in 2000. I lived in Pensacola for quite a while, and then I moved down to Okaloosa Island and lived on the island for the last 4 years that I was down there. Moved to Ohio in 2008, and I've been here ever since. So that's kind of where I'm at now. I live just outside Columbus, Ohio. Real estate wise, I started I guess I should say this. I started in 2000. I was a firefighter, paramedic down in Escambia County. And then I transferred to Okaloosa Island and I worked there probably till the end of 2007, beginning of 2008. I don't remember exactly. But right before I moved, I left there and came up here to Columbus, and I work here. I've been a career firefighter now in Ohio since 2008 and still do that. And then I wouldn't even say on the side anymore. It's pretty much taken over everything, but been a fireman still. And then like I said, we have the Stream Group. So we do pretty much syndications, large multifamily purchases, apartment complexes is what we do.
Awesome.
Pretty busy.
Yeah, that's super busy.
Yeah.
One, you're a real life hero, right? And we always appreciate that. And two, you're doing these multifamily property deals, and you've been around for a while, so you've seen some craziness. And then you have your vertically integrated company. So I have a whole bunch of different ways to go, but really, I want to know what attracted you to multifamily, why you decided to get into it, what made you think that you could get into it, and kind of that side of things.
Yeah. So first, I'm not sure if he's a listener or people may know him, but Matt Robinson, he's kind of a big wig over in Pensacola, Mobile area. Matt and I went to kind of college together. I went to the fire service and he went into real estate, and I lost contact with him for, I don't know, probably 10 years. But that was before Facebook and social media, before MySpace, all that stuff. And then when I reconnected with him, he was this kind of like this big wig in real estate, doing hard money lending, single family, fix and flips, all this stuff. And I was like, holy cow, like here's this guy I used to share an apartment with, and now he's got all this stuff going on. So he really kind of helped me get the fire going in real estate, where it was kind of, I knew I wanted to do something else as a firefighter because, it's been a great career. I love it. But as I started getting older, having kids, I realized that I wanted to not just always work my days off at another fire department or ride another medic or do something like that, which is what most guys do, at least up here. Down there when I worked, there wasn't part-time firefighting, but I used to get off from my job there and go ride the medic in Okaloosa County. So, it was always something that I was doing. And again, as I got older, I got kind of burned out with that. And I was trying to find something that was kind of a better use of my time or paid me better. My why has kind of always been my family. And, I reconnected with Matt. He had sent me an MP3 via email of like this week-long course he did on house flipping. And that was really like the first, I don't know, I guess exposure to real estate that I got outside of like HGTV. And I was like, holy cow, this, I was like, this is awesome. Like, I love it. But I was like, how do I get connected to somebody up here in Ohio doing it? And, I realized that it was the vehicle I wanted to use to kind of supplement my income or be a side hustle at the time. And ran into a guy up here that was a contractor that was actually flipping houses in real life and was just like super excited. Like somebody in real life was actually doing it that I knew. And so I knew then that this is what I wanted to do. I had somebody doing it that could kind of help me train or learn. And I've always learned best by kind of doing on the job training or doing it with my hands, like getting in and getting after it. And that's how I can only read or, listen to podcasts or do so much of that kind of educational side. I really have to kind of get in there and do it. And a lot of you guys would know that too. Like your very first deal, you'll learn more on that deal than on all probably the education you tried to do up to that point.
Yeah.
So I basically went to him and I said, look, I've got time, right? Our schedule is 24 hours on and we have 2 days off. And, I said, what can I do basically to help you? And so I can get that training. And what he needed was I can't think of it now. He needed like a property manager, but he needed a project manager for his flips because his kind of pain point was I can get contractors there, but he was so spread out that he couldn't be at these different properties all the time, making sure that they were doing what they needed to be doing. And he didn't have anybody that he could trust at the time. So I thought, well, look, I got a good background in construction. I've got time. I've got, education and building construction through the building code, the fire code, like all these things. Well, let me come and work with you. And I offered him to work for free because I thought, what I'm not going to, I'm going to give up my time for no money, but what I'm going to learn on the job with him and the connections I'll make will be priceless. So that was kind of how I got started. And the other part of it was at that time, I was afraid to kind of put my own money at risk. And I didn't have a whole lot of it. I had some saved up, but not a ton. And I was kind of scared to do that first deal on my own. So he was kind of like my mentor in the beginning, like in real life. I did that for a year. And then I through that experience, I recognized that multifamily was my vehicle to, wealth building. And with my career schedule, I needed something that was super efficient and that I could build out and scale to where I could be big enough to hire other people to work with me or work for me so that I could still focus on my career, have my family time, and then kind of have this side business. And got into my first deal. My first deal was a 50 unit. I went to another, I had my money saved up. I went to another investor and I said, hey, I've heard about the syndication stuff, these apartment complexes. This seems to be like the fastest way to get to where I want to go. How about you and I pool our money together and let's go buy the biggest thing that we can find. And that's exactly what we did. So the first one I bought was a 50 unit and learned a ton on that deal. But it worked out great, and we've been just growing ever since.
Sure, and you bought that as a partnership. You weren't raising outside funds at that point. You just took it down with your guys' own credit and money.
Yeah, so that was a huge. That's a whole nother lesson learned. You don't know what you don't know, right? When you get into it. But yes, we did a JV basically. I found the deal, sourced the lending. Did all the work, basically the construction side of things with the contractors that I had. He was an out-of-state investor that I had known for a long time. And so, yeah, the two of us went 50-50 on it. And he came up, I think, 2 or 3 times during that year to kind of help out with some things. But outside of that, it was my, I was kind of like the make it or break it in the deal.
Sure. And I guess one, I'm interested. Okay, well, how did you find that deal? You started out, you had a little bit of experience, but then you jumped right into a 50 unit deal. How did you come across that deal to start with? Were you working with brokers, other investors? How did that come across your plate?
Yeah, great question. So I was hustling. I was like, I was working with him. I was realizing that, it wasn't the way he was doing it wasn't super scalable, and it just wasn't kind of like the path I wanted. And so I was going around to offices like yours and saying, hey, look, I'm a multifamily investor. I mean, again, I hadn't really had a whole lot of experience, but I had some. And I was went in there, like, here's what I'm looking for. And I went into different brokerage firms, like real estate offices, anything that was around me, and said, here's kind of my box. Here's what this is what I'm looking for. And I was specific. And I had a realtor call me that said, hey, I know a seller in a tertiary market around Columbus here that's got a 50 unit that they're looking to sell. Would you be interested in looking at it? And I was like, well, yeah, let's do it. At the time, I never thought I could actually buy it, but I wasn't sure, and went down there and looked at it. And with a little bit of education and training I had, I thought, man, this is a deal, and put it under contract. And had a struggle getting lending on a property that big in the beginning. I think I went to 5 or 6 different banks before I actually found one that would actually lend to me, just because they felt like I was a great person to lend to, and the deal was good, but they didn't have enough experience for them to feel comfortable with the risk of lending to me. So finally found one that would do it, and that was how I got it done. So
awesome. And then what did you do with the deal? Big value add. You managed the construction. What was the things that you had to do to make that property more profitable or turn it into a good investment?
Yeah, so I mean, real rudimentary basics. I looked at some data through city data and rentometer and some other things, and I looked at the population of that area, and it wasn't like a metro area, right? But I knew that half of the population there was renters, so the demand was high for rentals. And this place was in a great area. It was like in a B neighborhood, and it sat right in the entrance of this neighborhood. But it was like probably like a C- condition. The bones of the property were great, but the tenant class was terrible. The people that they were allowed to live there and just kind of run rampant was rough. And so I went to some like local property management companies down there. I knew I couldn't handle both the leasing side of things and the construction.
Sure.
And what my stronger side of things was at the time was construction. So I thought, let me focus on that and the renovation side, and I'll let somebody else manage the leasing part of it and kind of rein in the tenants. And so that's what I did, and I focused on that. So yeah, it was a pretty big value add. We renovated, I think in the first year we renovated 43 of the 50 units.
Wow.
Put on new decks, all new windows, just a complete overhaul. And luckily for me with my career, I had time, so I was able to be down there, every day. I think I was working like 10-hour days on my days off down there doing construction, and I had about 6 contractors that were with me that were kind of like my crew, and they were always working down there. And then I was down there the days I wasn't at work.
Sure.
But I was, tons of sweat equity. I knew that first deal had to be a success in order for this to really kind of get off the ground. And I was willing to do whatever it took to get that to happen. So
yeah. What was the purchase price on that property? Do you remember?
Yeah, I paid $1.7 million for it at the time.
Yeah, 1.7 million is not something you can allow to fail and just walk away from.
Yeah, that's what my wife said too. She's like, she couldn't believe it. If you're going to do this, better work. And
well, you were only in it for half of that, right? You got your partner to sign on to some of it. Okay, yeah. So you go out there, you source the deal, you're working the sweat equity, you get the property management company to come in and start leasing up the units that you're not working on at the time. And really the value add opportunity was twofold. It was you were able to increase or force appreciation by increasing rents because of poor management before. And then you were also able to add value through the renovation and probably raise the rents a little bit more from that. Do you still have this property?
I do. Yep, we still have it.
Yeah, awesome. That is awesome. Did you get it reappraised or do any type of refinance?
Yeah, so we refinanced it at month 14 and we pulled out $1 million in equity, which was like the amazing part of it, right? It was like I was hooked. I'm like, this is it. I'm all in. My wife was finally supportive, and we paid off other investors because part of the I always tell people now, like, find a mentor, find a group to be a part of a local real estate meetup or something, because there's so many mistakes that can be avoided just by networking with people that have already been doing it, or even paying somebody for their time to help teach you, like I said, that on the job training, because I went into the deal, I didn't even know about bridge debt, which is basically it's high risk, high interest debt, but that's what they do is they take these unstable properties and they'll hold the note while you're renovating them. And once they're stabilized, we put it in long-term fixed debt. But I didn't know about those. And so the bank that I found to do it was a regular lender. Well, they wouldn't give me any money for construction. And so when we closed, we had about 50,000 in the bank, and I learned very, very fast that wasn't going to be enough money to turn this huge complex. So I talked to a fellow firefighter in Cleveland who had I don't know, I think at the time he had like 750 units, which was just unbelievable to me. And he was like, you got to go out and raise some private money. So I just started networking like crazy and found 2 or 3 people that knew me prior to real estate and just trusted me. And they said, yeah, I'll loan you some money. So I raised about $250,000 in just kind of like just straight debt investments. And that's how I funded the renovations. And again, with me doing, me and these guys doing a lot of the work, had I brought in like an actual construction company, we never probably could have afforded it, but
Sure.
It just happened to work out. And so when we refied, we paid everybody back, we pulled out our own money, and then we went on and bought our next deal. Our next deal was a 40 unit. And I realized that in the middle of that deal that I was like, man, if I really want to keep doing this, I'm going to have to figure out a way to do it where I don't have to put all of my money in every deal, because it's just not, I have high hopes and dreams of growing this thing big enough to where I'm not the guy doing the construction, or I'm not the guy dealing with tenants, or I'm not the guy that's doing those things. And so that's when I really focused on syndication and realized like what a huge vehicle for me that could be to kind of grow and scale. And that was really after that second deal is where I really started getting into the syndication side of things.
Yeah, I think that's pretty interesting. Just make sure that I understand it right. You started raising the private money for the repairs after you guys had already closed on the property and took it down? Or, yep. And I think a lot of people don't know how to start raising private money, and it's really hard to raise private money if you don't have a track record, you don't have any skin in the game, and you don't have the knowledge and experience to do it. But one of the things that I think probably worked in your favor is not only are you a stand-up dude that makes good relationships, but you also already had this property and could show them, what their money was going into, and you put a bunch of your own money into it. You were invested in this, and they knew, one, you're a good dude, but you are actually the guy in there making sure that this is going to succeed. So they might not know anything about real estate. They may not know anything about multifamily or how to manage construction crew, but they had faith in you that you were going to do that. Now, what did that do? It allowed you to force a lot of equity into the property and pull that out, pay them back. And that part of your track record lent to your credibility for your next deals, your syndications and stuff like that. You have something, you've put your time in, you've done that, and you have something to show your next investors. And I imagine that it is getting easier and easier to find people that want to invest with you because of the good things that you've done in the past. Is that right?
Yeah, that's 100% right. Yep. So everybody's got to start somewhere, and that just happened to be my path. But whether it's wholesaling or single family or fix and flips, the first couple deals are always like the harder ones, and kind of once you kind of get the ball rolling, it gets a lot easier, and now we have, I think in Central Ohio, we have got over 600 units that we own and operate. We do management and the construction. And then between the 3 of us that are in the stream group, we have over 2,000 units that we have equity holdings in across the country.
Yeah, that's huge. And you blow up really fast. You're able to leverage other people's time, other people's money now, and you're still able to manage it. So what kind of role do you have in the other company? So you have a property management company that's internal. You're not managing other people. Your property management company is managing your units.
Yeah. So we learned, just with like experience, we just continue to have like bad experiences with the management companies. Like the management company that I hired on my first deal, I fired after 12 months just because they weren't doing, I was there all the time and I saw they were very hands off and they weren't responding to maintenance calls as they should. And, had I been like out of state or somewhere else, I wouldn't have probably seen that, but because I was there all the time, I could really see it. So, finding a management company was tough. We still use outside management, but we only will use management companies that are in line with our interests. And,
sure.
and that's really the key part of that is we present a business plan. Sometimes they'll be like, no, we're not doing that. This is how we do it. And I'm like, okay, well, that's great, but we're not going to work together then. So it forced us to then to create our own management company. And so we have about 15 staff members that manage between the management and the construction side of things. They handle all of our own stuff here in Central Ohio.
Yeah, that's really good.
Yeah.
And the more control you have over the property, and more control doesn't necessarily mean that you have to be more hands-on, but you are ultimately
Absolutely.
the head honcho and can control the way things are going. And I imagine that your property managers are quicker to respond to you than some outside property management firm.
Oh yeah. Yeah. We have every morning at 8:30, we have a call and everybody gets caught up on what's going on or what's the issues or if there's any bottlenecks. And really that's kind of become like my main role now is investor. I talk to investors, I talk to brokers, I find deals. I kind of relieve bottlenecks for the team. So, if we talk to them and they're saying, hey, this is what's hanging us up, well, then that's my job that day to figure out how to get that, that out of their way so they can be successful. And it's really great now, but that's that has freed me up again to just continue to help scale the business and still be a fireman up to this point and, kind of see where things go.
You're still doing the fireman stuff, even
still
though you're
doing it. Yeah.
Oh,
Still
wow.
working every third day. I know it's crazy.
Labor of love.
Yeah. Well, it's interesting because it's like being in the military, and it's something, it's all I've ever known outside of real estate now. And I got into it when I was super young and, my partner's the same way. He's been in it 24 years and, it's one of those things where like, a lot of people talk about walking away from their W-2, but like, I didn't get into real estate because I hated my job or I was felt like I was trapped or I wasn't happy. I've always said that if it starts getting in the way of the business, like then maybe I need to look at stepping away, but like I still love doing it. I still love helping people. I still have that as a passion, but I could start to see myself now where it's like, hey, there's starts to be conflicts or it's like, okay, I have to go to the firehouse today when I really need to be focusing on this. So it's probably a matter of time before I end up stepping away, but up until now it's been great and I've loved it every minute of it.
So sure. Cool. Yeah, that is amazing. And I think we run into a lot of people who say, hey, I don't have time. I don't have time to do this. I have a W-2 job. I have a wife and kids and other responsibilities and stuff. And my position is always, you can have your full-time job. You can do all that. It's what are you choosing to spend your time on, right? If you're choosing to spend your time watching Netflix for 5 hours a day on your day off, well, you probably could be doing some of this other stuff. So yeah, I think that's pretty inspirational. If you can be a firefighter, full-time CEO, and you're happy doing it, I think that's something that other people should be looking to accomplish with their life and their goals. Yeah. So that's
well, and to speak to your point too, that's the thing I love about syndication is, or just being, there's so many different things that people can be involved with real estate, was that you don't even have to be an active investor. Sure. If you're somebody that's a high income earner and you're, like you said, you're like, we've got physicians that invest with us. We have attorneys, we have all kinds of business owners, and they're like, I love real estate. I understand that it's a great hedge against inflation. It's a great vehicle for wealth. But I don't want to give up my job, right? I love what I do. I went to school for 12 years to become a surgeon, and that's what I'm passionate about. But I understand that I should diversify my portfolio. That's the great thing about what we do, is we offer that opportunity where they don't have to stop, and they can still enjoy the benefits of real estate and not have to, be the guy swinging a hammer or even managing it or having to worry about the day-to-day stuff. So, it's just, there's so many different opportunities.
And obviously, we can't give specific returns for specific projects, but typically speaking, you're getting better returns than you are in a savings account. You're getting better returns than you are in most stocks, bonds, mutual funds, that kind of stuff. And you're, in most cases, secured to a real asset, something that is tangible and real. Not just a piece of paper. So I think there's a million different reasons probably why real estate investing, whether you're an active investor or just a passive investor, can be beneficial and provide wealth to your family.
Yeah. And one of the great, you mentioned a ton of the reasons, that one of the other great benefits of commercial real estate and with the apartments is just the tax advantages. If you flip a house and you make $100,000 or $50,000, you're paying all the income tax on that. There's no really way for you to kind of shelter that. And, when you are doing stuff in the commercial side of things, there's all kinds of tax advantages that you can take advantage of through the way that we structure things and the way that the depreciation is passed on to limited partners. And, if you're big in the stock market and you have a great year and you're an investor in an apartment complex and you get that depreciation at the end of the year, you can write off your capital gains that you earned in the stock market from the depreciation that we hand over to you. So there's so many different things that you can do tax-wise in commercial real estate that even in the residential stuff, like wholesaling and, it's just tough to, I wouldn't say shelter it, but you know what I mean? there's so much tax code that's built in for different real estate ventures. It's great.
Right. Yeah. No. Absolutely. And really, the goal of every real estate investor that I know, whether it's an active wholesaler, active rehabber, is to ultimately get to that passive income, to turn that active income into passive income. And a lot of times, especially somebody who hasn't grown up around people who are doing these big deals, they think the only way to get there is step by step. Well, I don't have any money, so I'll start wholesaling. Then I'll use that money to flip. I'll use that flip money to buy and hold. I'll use that buy and hold to go to small multi, and then to large multifamily. Then I'll start my syndications. But it doesn't necessarily have to be like that. And if you have extra money, you can jump in at pretty much any level of that real estate progression that you want.
Yeah. And we have people involved all the time that, like, let's say that, somebody in Northwest Florida finds a deal down there, and they're like, hey, I don't know what to do with this apartment building, but like, even to you guys, it comes to you guys and you're like, man, I got a 100 unit down here, 50 unit or whatever. We don't have time for it. Well, you call me, we can take down the deal. You guys get to be a part of the general partnership, and you get equity, you get to be on that side. And so you instantly go from a wholesaler to being on the team of an apartment owner. And you know what I mean? You're instantly in the larger game, and you didn't have to do anything other than find the deal. Or, you know people that are like looking to place capital. We have spots that we carve out in the general partnership for relationships like that, where so there's all different kinds of ways to get into that higher level. It doesn't necessarily mean you have to find the deal, fund the deal, get the loans. I mean, you don't, do all the work, manage it. The big stuff is a lot of people will say is a team sport, where when you're flipping a house, it's kind of like you doing it on your own. And there's so many different roles that can be played in ways that the equity can be carved out, that it can be successful for multiple people.
Sure. If you're talking to a new investor and that they wanted to get into this type of investing, where do you think they should start? Do you have book recommendations, masterminds? Where do you think somebody who's just starting out could get the most bang for their buck?
For syndications or just real estate in general?
Well, you can answer either one, but I specifically starting the larger multifamily investment path.
Yeah. So a good book that I think that if they want to, they have something active that's going on and they're doing that is Crushing an Apartment and Commercial Real Estate by Brian Murray. It's a great book that kind of spells out like what is commercial real estate, what are all the terms. I mean, the terminology in commercial real estate is completely different than in single family, and even some of the metrics, the 1% rule, the 50%, all these different things that you use, or like Bigger Pocket talks about. It's just different. It's a whole different thing. So there's that book, I would say. And then the Joe Fairless, he's a Cincinnati guy, has a book called Best Ever Apartment Syndication Book. That's another one it's a good, like I said, reference book that kind of mapped out how he became successful. It's not the same path that everybody takes, but those are two books that you could look at and say, again, that you could dig into. Because like for me, I listen to books, and I do it while I'm driving around, because there's just so much time that you spend in a vehicle. And I years ago I stopped listening to music really, and I listened to books on tape, and that's how I read most of my books, because it's very hard for me to sit down and read and give up all that time. But in a vehicle, it's just I'm already spending the time in there anyways. I might as well just be self-educating. So I think that, and then just like I said, finding a mentor. We've got a Facebook group called Fireproof Your Finances with Multifamily Real Estate, and people can search that out on Facebook and join that. And this is all we talk about. We give out free content. We talk about deals we're doing and how they work, and people ask questions all the time, and it's just a great place for new people to kind of learn about multifamily, whether it's a duplex or a 4-unit or a 24-unit, whatever size it is.
Sure. Okay, and now kind of the opposite. Let's say we have a high income earner who's listening to the podcast, might think about wanting to get into lending funds and becoming part of a limited partnership. What kind of things would you tell them that they need to do to be able to vet the general partnership? What should they be looking for before they place their hard-earned money with some syndication group?
Yeah. So the first thing they need to find out is like, what type of deal are they looking to invest in? So there's syndications that are 506Cs, which are for accredited investors only. And there's a standard or criteria by the SEC that is you have to meet in order to be that. So that's one type of deal. And then the other type of deal that a lot of that we do are 506Bs, and they allow for up to 30 non-accredited investors. And then beyond that, we can have so many accredited. And a lot of our stuff gets done by non-accredited investors, but able to invest in our deal or somebody else's deal underneath that SEC regulation by having a previous relationship with and knowing, basically me as a sponsor, I have to know that or understand what you're getting into and what the risks are. So that's really like, the place that I tell people to start is just network. Like if you've got somebody that's listening to this podcast and they want to know more about syndication, get a hold of me, email me, or go through the website. It doesn't mean that you have to invest with us, but I'm there to answer more questions, right? And I think that the big thing is to know, like, and trust who you're investing with. That's the way that we kind of operate, and a lot of guys I always hear they kind of a term they say is they bet on the horse, they bet on the jockey and not the horse, which just means that like the deal is kind of like an afterthought, right? They want to know who they're giving their money to, who's running the deal. Is this person going to go the extra mile and really kind of dig in and make sure that the deal's not going to become a failure? Are they going to do whatever it takes, no matter what, to not lose my money? And, that only comes through networking and relationships. And so I think that, you could give your money to a REIT, you could give your money to some big equity firm, but a lot of people that we deal with, they want to be able to pick up the phone and call me, or they want to be able to come and see the asset, or they want to, some guys we have that they want to know, like, kind of get a cockpit view of how this whole thing works. And you're not going to get that when you invest in one of these really big real estate investment firms or groups. So, that's kind of what I kind of tell people is if you have interest, seek out either other groups on Facebook, or like I said, get a hold of us and we can start kind of getting to know each other and see if we're a fit.
Sure. That's great. Now, I'm sure there's going to be people that want to learn more. So you're recommending they go to your Facebook. Is there anywhere else you want to send them?
Yeah, so they can look me up on Facebook under my name, Seth Teagle. I'm on LinkedIn. We're on Instagram. And then our business website is www.thestreamgroups.com. And the stream groups is plural, just because we've got, like I said, management, construction, and the syndication side of things. So they can look us up there. They can kind of see what we do and who we are. And then they can fill out a questionnaire on there, and that'll get emailed to me. And then either myself or one of the guys, one of the partners will reach out and, kind of see where things are at and what they're interested in and if we're fit.
Awesome. That's great. You provide a lot of good information and a lot of actionable steps for guys looking to get into this on either side, as a passive investor or an active investor. Seth, we really appreciate you coming on the show today, and we wish you a lot of luck going forward.
Yeah, appreciate it. Thank you very much.
Yeah, we got your short-term rental rate waiting out.
I'm ready for it.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter at The Real Estate Jam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.